All right, so today's Christmas. The market is closed, so I'm pretty much just waiting till tomorrow. Not really like a big Christmas guy at this point in my life. I'm 25. When I was like 15, 16, 17, yeah, it was a bigger deal, but now it's like I'd rather the market be open, you know? It's actually pretty funny. But so I want to make a video about how trading psychology, because people focus on trading psychology a lot. But to me, trading psychology doesn't matter until you have a well-defined edge. So when I say well-defined edge, I mean you open up the market and within 10 seconds, you pretty much know whether you're going to be trading that day or not. If you're taking the bigger moves, if you have to wait for your setup to develop during the session, then that's different. But for someone like me who takes the bigger moves, like the bigger 1 hour, 4 hour trend line connections, then I know pretty much within 10 seconds whether this day could be a setup or not. And to me, that's how I know whether I have a truly defined edge. Like if you asked me back in September, I would say that I did have an edge, but I really didn't. It wasn't until October, right in the very beginning, or very late September of 2025, that I finally actually wrote down a playbook and had setups, like well-defined setups. It was, to me, one of my final awakening moments. Because as a trader, you have awakening moments. And this was like my final big click where I'm like, oh wow, I really know when to trade and when not to trade. And that's a very powerful feeling as a trader. It gives you a lot of confidence. And you don't want to trade with feelings, but it's more of it's an increase in confidence is what it is. And yeah, increase in confidence that I'm going to be a successful trader going further, going past this point. So let's talk about the more detailed reasoning of why I think psychology is overrated until you have a well-defined edge. So the problem with blaming psychology in trading is that when you make a mistake, you can rationalize. Like as traders, we're able to rationalize, which is not a good thing, why a, a trade happened due to, oh, it was FOMO, or it's usually FOMO. I mean, the two things are patience and FOMO, and they're tied together. If you have FOMO, you don't have patience. If you don't have patience, you most likely have FOMO as well. So traders blame psychology. And this can be a slippery slope because you can go months or even years doing this, not realizing you don't really even have an edge, like a true, well-defined edge, not just something that like makes sense in the market, like, oh, this could be my edge. It's a well-defined edge where yes, this is my trade. If you hesitate to think if it's your trade or not, it's most likely not your trade. And you'll realize that over time that those tend to be losing trades if you do take those trades, which you probably do because most traders have FOMO. You can only blame psychology once you have a well-defined edge. Because if you don't even know when to trade, when not to trade, how can you just blame your emotions? You don't know when to trade and when not to. That is the foundation. And then after that, you can think, oh, I took that trade because of, or had FOMO. Or I was kind of bothered by, I missed the trade yesterday. So, I wanted to make up for it today. Only then can you blame psychology. But before that, you can't blame psychology because you'll just rationalize why it's psychology, not the problem that you actually don't have an edge. And this was such a massive turning point for me in my trading because before that, I could just blame psychology. But at some point when you're just like break even trading, because that's basically what was happening, you kind of like, you win three, no, like you win like one, you probably win like one, and then you lose like three, four, and then you win one, like that type of thing. And it just kind of brings you back into break even or a little bit in profit, but then you just lose two or three more. It's difficult to string together multiple winners and minimize the losers when you don't truly have an edge. So if you are trading and you don't have a truly defined edge, you're wasting your time. You need, like in the very beginning, just looking at the market, cool, just seeing how things go up and down, like trying to be in tune with the market, seeing how it behaves. That's cool, but a couple months in, if you don't have a truly defined edge, you're going to be wasting a lot of time. And you're going to be blaming psychology. Like if you take a trade and you lose, you'll rationalize why it was FOMO, or you'll look for a reason why it wasn't your trade. Because you can always look and find something. Well, oh, well, like, this level is like not the best. Maybe this level is supposed to be it, or the candle closed above the level, then it broke below. But you could rationalize everything. And that's the problem, is that when you don't have an edge, all the noise comes. But when you have an edge, you can block out all the noise. Like the setup's occurring, but there was a little double bottom here. It's like you block all that out. Like before, if there was a double bottom and then it's coming up and it's a short setup, I'm like, oh, well, there's a double bottom. I don't know. It's like, but once you have a playbook, you're like, it's my edge, trend line, key level, whatever your setup is. And you just take the trade. And if you lose, you actually don't get affected internally, which is such an amazing thing. Because before, if you lose, you constantly question, which is just kind of like what humans do, right? We want to try and figure stuff out. But once you accept that losing is part of the game, you have an edge, then psychology comes in. And that's a different video of how to overcome those emotions and whether you should even have those emotions to begin with. I think if you already have an internal battle with the two voices, take the trade, don't take the trade, that's already the first problem. Once you have an edge, you can work on it after that, but you need an edge. So write on paper, playbook, have your setups, however many you have, 1, 2, maybe 3 setups. It's really all you need. I only have 2 setups, and I use one of them like 80% of the time. The second setup is a reversal setup that doesn't come as often. So it's probably like 20% of the time. So I think that's really it, man, for this video. Just get a playbook, write it down, have it on your desk, look at it before the session opens, understand, okay, like these are my setups. Is there a possible setup today? Like write it down, journal. You have to journal too. Every morning, write it down, write the date, the year, write what you're thinking if you want. I just write, I did have an exact script that I was writing, but it didn't make sense to me at some point. I actually wanted to write down what was happening on that day. Like certain levels, and I don't really write down what I'm thinking, but I'll write down whether there's a possible trade setup. That's what I will do. And I'll just wait. I'll write down, have patience, 80% patience, or 80% doing nothing, 20% action. The 80% waiting is queuing you up for that trade. That's just because you're not making money for those days doesn't mean you're doing nothing. Doing nothing is doing something in trading. And that's the thing that people have to reconvert, that they reconfigure their mindset in trading, because it's not like other businesses. The more effort you put in, it does not always mean, it usually does not mean more profit. Less trading, more profit. It's a crazy thing, man. I'll catch you in the next video.